Okay, I'll get us started.
Good afternoon, everyone. Welcome to this second in our series of webinars on opioid settlement funds. I'm Christy Hirschberger, General Counsel with ISAC. And today we're going to be talking about some of the reporting and auditing requirements you'll have when you're using and tracking your settlement funds. Like I said, this is the second in a series. Last week we had a webinar more just on general uses. So if you haven't had a chance to listen to that one was recorded. You can check it out on our website. And we'll be having probably at least one more in October on some of the possible options for handling your funds in terms of financing. But if you have other questions or other topics that you'd like to see webinars on, please let us know. So thank you so much for joining us today, and thank you to all of our speakers. I'm going to let them introduce themselves as we go. I've got just a couple of housekeeping items that I wanted to mention. Like I said, we are recording this one just like we recorded the one last week. So if you want to go back and re-listen, or if there's anybody else in your county that you want to have listened to it, those will be out there. Also, if you have questions, we welcome all your questions. So you can put those in the chat and we'll kind of cover them as we go. I'll keep an eye on that. And then the other thing I wanted to share as kind of a housekeeping item is something that we mentioned last week. We talked about how if there were some counties that wanted to share their resources, not necessarily as a sub allocation, but we talked about if you're a county that got a smaller settlement amount and it's a struggle to make an impact with those smaller dollars, one of the options that you could consider is to have those funds directly allocated to another county nearby you, so that the programs that that county then put in place could benefit your residents as well. So we put together some resolutions for you to be able to do that because there wasn't explicit language under the MOU talking about it. So I'm going to put both of those resolutions in the chat. There's a sample one for the county that would be directing those funds to another county, and then there's a sample for the county that would be receiving those. And basically they just say, especially for the receiving county, that they'll follow all the same requirements as though those funds were their own funds. So I'll pop those into the chat. And the other thing I will put in the chat, we had a question before the webinar kind of from last week, but also, of course, we're considering it this week too, where they can find the list of how you can use those funds. And so it's an exhibit in the Memorandum of Understanding that all the counties sign. So if you have that, you can find it there, but I'll also put it in the chat for anybody that just wants to easily be able to reference that. And with that, I will turn things over to Amy. She's here with the Iowa Attorney General's office today, and let her kind of introduce what sort of reporting they're looking for from their office. Thank you, Amy.
Thank you, Christy. Good afternoon. As Christy said, my name's Amy Licht. I'm an Assistant Attorney General. I work in the Iowa Attorney General's office in our Consumer Protection Division. And I have been working on the cases that led to these opioid settlement funds for a number of years. I'm pretty familiar with a lot of aspects of them. And I may have spoken to some of the folks who are attending this webinar over the course of the past year plus, as you all have been I think grappling with and working through county participation. So in the settlements, and so appreciate the opportunity to talk to you today. I'm going to sort of, I'm going to throw up a few slides. I'm going to try to do this and hopefully if somebody will tell me if it isn't working, because screen sharing is not my greatest strength. But let me see, I'm going to start talking. Yeah, here we go. Opioid settlement funds. And I'm just going to talk about the MOU reporting requirements. And as Christy mentioned, so MOU stands for Memorandum of Understanding. It is the agreement that just operates within the state of Iowa. Every county and every eligible city in Iowa, so those are cities above the 10,000 people in population as of like 2019, did sign on to the MOU. Hopefully you have a copy of it somewhere. If you ever need one, I know Christy's putting the permitted purposes in the chat, which is like an exhibit to the MOU. If you're ever looking for the document itself, it is on our website, the Iowa Attorney General's website. So this first slide just kind of recounts that the Memorandum of Understanding is the agreement It's not the master settlement agreement with the defendants in these cases, which are the big companies, but it's the in-state agreement that governs the allocation of settlement funds for the distributors and Johnson & Johnson / Janssen settlements, and among the state, the counties, and eligible cities. And you can find it on our website if you ever need it and you just need it quickly. It does have 3 attachments, and one of them is the list of permitted purposes. And I'm here today to talk about what the reporting requirements in the MOU are. And I've kind of parked in here a pretty dense little paragraph, but I'll try to walk through it. It's paragraph C4A in that memorandum. And it says that each participating local government, so that's anyone who's participated in the agreement, that receives a direct distribution, has to prepare and file a public annual report describing the expenditure of its direct distribution amount. And then it just kind of describes what the report should include. The report shall include, but is not limited to, a narrative description of the funded programs, the dollar amount provided, and the progress and/or outcome of the funded programs. And it says, participating local governments can work together to prepare and file joint reports if they choose. Further into the agreement, I haven't quoted it here, it indicates our office can use those reports to report to the public. And that's really the objective, I think, of the MOU reporting requirement, is to gather just information about how the settlement funds are being used in a single place, which is something our office is going to endeavor to do, and then just be able to provide that information to the public in some kind of coherent way. Like you all, the state is just at the start of kind of figuring out exactly how some of the mechanics of these settlements are going to be handled. And so I'll tell you that although we have this description in the agreement, unlike some of the other folks on this call who you'll hear from, I'm not prepared enough to actually have a forum to tell you kind of like, what are you going to need to do? But as I said, the purposes of reporting are going to be to inform the public how the funds are being used. And, I think it may be an opportunity for collaboration. If you see that other counties are doing work that you are, it's a time to step back and look at how the funds are being used across the state, and maybe give folks an opportunity to work together, share resources or information if there's overlap in what they need or what they're doing. That's kind of the objective. The mechanics: when, where, and how are counties sort of expected to comply with these requirements? We are working on that. And so it says here, and it's the case, we're working on developing a reporting mechanism at the moment, and it's still sort of under development. What I would anticipate is a form that's a page, possibly up to 2 pages long, but our objective is to not make this either difficult or onerous for anyone. We understand counties have a lot that they're doing all the time, a lot of reporting that's already required, and we don't want to create kind of excessive additional burden. We want just something that's going to comply with that paragraph that I described earlier. So hopefully it will be all digital. It'll be something you can do digitally. We do not have a timeline yet. I presently anticipate that any report would be due after the close of your fiscal year 2023's annual financial report is due. So we're going to try to kind of be mindful of those existing reporting requirements that you all are already working with and complying with. And what I would say is, at the moment, we're gonna endeavor to have more information on our website in 2023 as we see the funds come in, and we have a clearer sense kind of some of the other dynamics here. We'll be sure to work with ISAC to make sure that when more information is available, we get it out to you. So we're not expecting anyone to be checking our website, all the time. We'll give you a heads up when there's a reporting mechanism available. And, you can, I think, assume that, we're going to be flexible, and what we understand that this is new for everyone, our office included. So we're going to endeavor to do something that makes sense and satisfies the requirements of the memorandum of understanding, but doesn't create sort of a burden that's sort of disproportionate or excessive for anyone. And that's it. That's what I have so far. I'm happy to take questions if they come up now, and I'll leave it to Christy to tell me whether that's so, or in the future, you know, if you have questions as you're working through this, and you'd like to talk to our office, please feel free to contact me. Thank you.
Thank you, Amy. I think the only question we had come in right now was just where will this report be filed? And I know you're working on a lot of the logistics on that, but I'm assuming it'll be with your office in some capacity, right?
Exactly. It will be with our office. Yep. That's how it'll be handled.
Okay, thank you. We'll see if we have other questions come up. That's the only one I saw come in so far. So for now, I will turn it over to Carrie with the Department of Management. Thanks for being with us today, Carrie.
Thank you. Hi, everyone. Again, Carrie Johnson, Department of Management, and I'm going to attempt to share my screen. So if you don't see something that has the Department of Management blue on there, let me know. Everyone see? Okay, got it. Thanks. Okay, so what I'm going to talk about is really kind of the so you've received this money, obviously, to get to those reporting requirements, you want to have the money be easily tracked, right? And so, of course, with county finances, how do we track our ins and outs? We use the uniform chart of accounts. So early on, I don't know if it was early on, but it's been a few months, right, Ernie? I met with Auditor of State's office, and we reviewed the MOU and the exhibits and talked about it and said, okay, you know, what could be beneficial to add to the chart of accounts that would help folks, you know, track their finances in accordance with the requirements of the MOU and the different expenditure types, you know, so they could narrow those down and pull those as needed. Again, if you're not familiar, the chart of accounts is the uniform chart of accounts. You know, includes all those lovely account codes that counties use, and it is a product of the County Finance Committee. So during the year, we typically have, you know, maybe a situation here or there where we think, you know, based on a new grant or new activity, that something needs to be added to the chart of accounts. And we do those throughout the year. We communicate those out, but then to the actual document itself, those, you know, revisions are added typically once a year, or more often if needed, but once a year at the County Finance Committee. So if you go to our website now, we have the uniform chart of accounts out there, but it was updated formally about a year ago. And our County Finance Committee folks, Ernie and I were just talking about this. We're probably going to try to meet, you know, late November, something along those lines. So at that meeting, we'll have the County Finance Committee, you know, adopt the revised chart of accounts that would just place these items into the document, and then, you know, the document would fully recognize all of these different additions or changes that we've made. But we have communicated those numbers out to folks, to county auditors via email. So if you're looking for those or you haven't seen them, just let me know. Because, excuse me, because of the requirements of the funding, it was determined that it would need to be a special revenue fund. So we added in here a suggested fund number. And keep in mind, you know, as in your local county, you may be using this number for something else. That's, you know, that might happen sometimes. That's fine, but just use another available number and, you know, make sure to give it the same title, and, you know, be sure that you understand what fund is you're using, what fund number you're using for the opioid abatement fund. So special revenue fund, revenue source, we kind of struggled with this one because it's a little bit unusual. It's not like a grant. It's not really intergovernmental revenue in that source. It's, you know, a settlement that you're receiving. So we kind of landed on 8120, which was a miscellaneous type, as the government opioid settlement. So that's your fund number, and then your revenue source. And then we also did add a function. So in the 3000s, which is your physical and, and human services type activities. So we added that as a 3520 opioid litigation settlement, and this, really accounts for those activities that you're carrying out. So again, new fund, new revenue source, new function. So this is really intended to be able to isolate those funds easily. And as far as reporting from the DOM perspective, keep in mind everything's rolled up when you report to us via the budget or the annual financial report. So, your revenue here, and your use of the fund, that's going to be rolled up into, the 8,000s for miscellaneous. Special revenue is going to show up in that special revenue other. The function will be clearly shown as a function within service area 3, like on your reporting forms, even at the state level. So that just, kind of walking that through to where you'll see it actually show up. And then of course we have the expenditure objects, which is more of your detail. We added the administration sort of in that 37X area where other administration type activities are occurring. And then we just really kind of just went through and mirrored the settlement MOU exhibit as far as the different specific types of activities and the numbers that you could use, ending with, of course, an other that's more comprehensive, and if it doesn't fit one of the other categories. So again, the function is going to show up in your fiscal 24 budget, and then when you do that fiscal 23 annual financial report, you'll see it in there, right? Because really your expenses and those types of things are coming about in fiscal year 23. With that in mind, obviously folks adopted their fiscal year 23 budget prior to receiving these funds. So, and didn't budget for the expenditures, right? Because you didn't really know what was going on. So just keep in mind, that service area 3, you may not have enough total expenditures in there, obviously, to cover those additional items that you're doing under the opioid settlement. So chances are pretty good you're going to have to amend your budget before you expend out for many of those activities in this new, program. So that's sort of my spiel. Are there any questions on that?
Carrie, we had one come in about the special fund.
Yeah.
Is that required or recommended if county is using a project code system? Do they still need this special fund?
We recommend the special revenue fund based on the stipulations within the settlement itself. Yes.
Thank you.
Yep.
All right, I think that's the only question we had come in for you right now. But like I said, I'll keep an eye on the chat. And then I will turn it over to Ernie with the Auditor of the State.
Good afternoon. So I'm Ernie Rubin. I'm the Deputy Auditor of State for the Financial Audit Division for the State Auditor's Office. And I'll try to share my screen. I put mine into a PDF thinking that might be a little bit more dummy proof. So hopefully this will work out just fine. All right, hopefully you're seeing a slide that says ISAC opioid webinar. So we kind of, back to Carrie's point, we kind of learned about this. I think it was early in the calendar year. We started getting questions from counties and trying to understand what the requirements are. We got a copy of the MOU. Started reading through that, and I'll just point out here that one of the items in the MOU does say that you will create a fund, a separate fund. And so that's why we went with the special revenue abatement fund. That's a special revenue because it's restricted. It can only be spent for the purposes of the MOU. So that's why it's a special revenue. And then the name is pretty clear as to what it is. So anybody who picks up an audit report or picks up any sort of report that has this fund activity, it'll be pretty obvious as to what it is. One thing that stuck out to us in the MOU was this section that says each LG abatement fund shall be subject to audit in a manner consistent with the Code of Iowa 331-402. That code section is nothing more than just the section that requires a county to have an audit completed. And then 11.6, which is the state auditor's chapter. It's always been there. It's just audits of governmental subdivisions. And that was fine. We felt like that's a normal audit. The next piece kind of caused us to ask a few more questions, and that had to do with any such audit shall be a financial and a performance audit to ensure the LG abatement fund are consistent with the terms of the MOU. So we had a meeting with AG's office, including Amy, on that. And the AG's office, as Amy had indicated, they're less concerned with sort of having a special report, audit report put out for performance, and more concerned with just ensuring that those funds are used in accordance with the agreement. So I think from my perspective, or from the auditor's perspective, and from the county's perspective, that's good news. Amy said they're not trying to put a lot of extra work on the counties, especially now with CARES and ARPA and everything else that's going on. So we felt pretty comfortable that we were in a good position and wasn't gonna add to the audit bill really of any significance. Just in the way of CPA communications, we prepare a sample report, and it's on our website. And in this most recent sample report, which is actually for fiscal year 22, we put a statement in there, and I've added it to this slide. And this sample report's on our website. You can put the link there. In there, we just said counties can expect to begin receiving distributions from the national opioid settlement. The Department of Management is in the process of finalizing a chart of accounts, which essentially Carrie has said that they do now have that. It just has to be final approval by the committee. And then including the addition of a new special revenue fund, the local government opioid abatement fund. So that's just alerting the CPA community. We do about 38 counties in the state. The rest are done by private CPA firms. And so the communication we have with them is by this means, as well as training. So I think next year we have a session with the CPAs. We call it local government update. And this will be one of the topics we'll talk about, is this abatement fund. Just making sure everybody's aware. Again, the money started coming in 23, so the audits, there should be no audit impact in 22. It'll all be a 23 audit impact. So how we're thinking about at this point dealing with the future for 23 is we are required to prepare audit programs, and those audit programs are made, those are on our website, and those are made available to anybody who has an internet connection, but primarily it's for the CPA firms. Some of them use our audit programs and some use a third party, but we do communicate in those audit programs steps that we believe should be taken. So I anticipate when those audit programs come out next year that we will have some steps in there to test some of the activity, probably scan the disbursements, select a few, and just make sure that they, one, are recorded correctly, and two, that they are for the opioid settlement, that they're appropriate for the MOU. Any findings that we would have, or the CPA would have, would be communicated in our audit reports as a finding and recommendation, which is the back part. You're all familiar with those. And a question came up about, well, where could there be some discussion about that? And it feels like the management's discussion and analysis, which is at the beginning of the audit report, could be a place where you could talk about the opioid settlement and sort of the economic outlook section. Kind of, it's more a forward-looking paragraph to that document. At least that'd be a place that you could talk about it and kind of let the citizens know sort of what's going on with that. So what can you do now? It's already been said here a couple of times, but it'll be critical that you have the Board of Supervisors and the county auditor, and those dealing with the funds, have a good understanding of the terms of the MOU. It's not terribly lengthy, by the most lengthy part is the approved uses. But I think having a good understanding, so you know that when an expenditure comes through, that the board and the county auditor, when you scrutinize those, that you determine that it's appropriate. The other thing is just ensuring that when those funds come in, they don't get put into the general fund, but they actually get put into this special revenue fund. And then, part of the expenditure side of things is just ensuring that those expenditures are recorded correctly. So it could be that it's appropriate for opioid, but then the second piece of that is, has it been dropped into the proper expenditure objects? And I think that'll be important when you go to do these reports that Amy talked about back to the Attorney General's office. When you look at an audit report, the ones that will get put out by the CPAs, it'll just have the total service area expenditures. It'll be one lump number. It'll be the detail behind that will be important for the county auditors when they start preparing these reports. That's where the detail will come from. And so just ensuring that that's recorded correctly at the beginning will help that reporting later to the AG's office. That's really all I had. Again, not a lot from the Auditor State's office. I think that was helped along again by the fact that there's not a performance audit, special audit required under the according to the AG's office. Had that been required, then it would have added additional cost and time. And I'm not sure. I think the AG's office has said we just want to make sure the funds are spent. And I think having it set aside in a special fund with these object codes is going to go a long ways to make sure that happens. So what they say about the auditors is auditors bayonet the wounded, and I think that's a pretty accurate description of what an auditor does. So thank you, and if you have any questions for me, I'll be happy to answer those.
Thank you, Ernie. We did have one more question come in. I don't know, Ernie or Carrie, which one of you want to take it, but so there was a question that says, if we created the new fund, then do we have to create a project? Do we have to have a project as well?
I don't know if Carrie wants to answer it, but to me, if it's in a special fund, if it has its own fund and you're appropriately classifying the expenditures according to the chart of accounts, I don't think you would need that.
I agree, unless there's some other reason why you want to, flag certain activities on, to be connected to some project, for your own purposes. I think when we set up the chart of accounts numbers, it was intended to help you fulfill the requirements of the MOU for tracking.
Thank you. All right, I don't see any other questions coming in right now. I'm going to give it just a minute. So if anybody else has other questions, now is your chance. Although I know all of us will be available for questions as they come up, because we're just kind of starting to figure this out as the money is first coming in. So. And I did get all those documents into the chat for anybody that wants them, the 2 resolutions and then the exhibit. There was a question about, do you know how long this money will continue to come in? I don't know, Amy, do you want to speak to that one?
Yeah, I can take that one. So there are 2 settlement agreements that that's where this money is coming from. The Johnson & Johnson settlement agreement has a term of, boy, it's 5 or 6 years. I should know which one it is. It's a number of years, and I think it's 6. The distributor settlement agreement is an 18-year payout. So the payments are, they're not all precisely the same in the early years. So there's some fluctuation, but the distributor's payments will go out for an 18-year period. So it's quite a long time. If there's interest in kind of being able to see how much money is going to come in over a course of years, that's something that we can try to provide. It takes some math, which is other people here are better mathematicians than I am, but we can endeavor to put that together if there's interest.
So Christy, I'll just jump in here too. Bill Peterson with the Association of Counties. So I think Christy mentioned earlier that we were going to be providing a webinar later on with some of the financing options. And what I'm referring to is securitizing the settlement payments. There's some due diligence that needs to be done to make sure that if we were to provide that information, first of all, that counties had the capacity to securitize that. We'd want to make sure that the MOU and then any statutory requirements related to counties' operations would make sure that that was authorized. In putting information together for that type of presentation, and it could be in October, it might be into November, we'll be having a financial institution put together a county by county estimate of what the payments are out over an 18-year period, or 18 payments over 16 years for the distributor's share of the funds. But we'd also be putting together a schedule of what the Janssen & Janssen, or Johnson, the manufacturer's share would be. It's likely that it wouldn't make as much sense to securitize the manufacturer's share, since from my understanding of the payment mechanism, there's a much larger upfront payment in the first year or two, or the first year, and then smaller payments subsequent to that. So it wouldn't be like you'd be waiting 16 years for a full payout. Whereas under the distributors, I think you can generally assume that most of the payments will be about the same as your first payment. The one issue that will need to be resolved is there's a 15% withhold currently for the attorney's backstop fund. And that would be to pay attorneys if they were unable to get fully reimbursed from the national attorneys fund that was set up in the national settlement. So it'll probably take a while for whatever body is determining how those attorneys get paid to determine whether or not the county will get that 15% back, or some of it would have to go to the attorneys that represented the counties in litigation in Iowa. But those, again, as Christy mentioned, we'll be holding an additional webinar on that. I would note that those of you that are interested in ideas on the uses of the funds, the National Association of Counties Opioid Solutions Center will be hosting a webinar tomorrow afternoon, 2 to 3 p.m. Central Time. I think it's 3 to 4 p.m. Eastern Time. But if you went to the NACO website and went to the Opioid Solutions Center, you could find how to register for that. We could, if I had that handy, I could have Christy pop it in the chat. But we can put a link to that on our website, so that if you went to our website, you could find that as well. It just does require registration. You don't need to be a member of the National Association of Counties, although I don't know why any county wouldn't be a member, but if they aren't, you could you can still participate in those webinars and training sessions that they have.
I'm working on pulling that link up, Bill. We did have another question come in on uses, can the funding be used to conduct a needs-based assessment to determine how to direct the settlement dollars?
Do you want me to respond to that one? So, I'll start with the caveat that, our office can't kind of advise counties as to whether a particular use qualifies as a permissible one for a number of reasons. But what I would say is take a look at Exhibit 1 to the Memorandum of Understanding, and there are like 8 core strategies that the MOU requires that like at least 75%, I believe, of the funds be spent on. It does allow for 25% of the funds at a county level to be spent on other a larger, more expansive list that's in, I think it's part 2 or Schedule B. I do think that kind of needs assessment, even if it's not, that doesn't necessarily fall under a core strategy, would probably fall under a non-core strategy. And what I would say is, it would align with what Carrie and Ernie are talking about. I think if you want to do something, that a good place to begin is to look for it on that list and see if you can fit it under a category. And that's kind of the best way to begin. So I can't tell you kind of offhand if that kind of strategy is on there. I imagine it falls in somewhere. It may not be a core strategy. And so you just need to think about that a little bit. I think that's what I would suggest.
Thank you, Amy. I know I always tell folks, make sure you're talking to your county attorneys about these questions too and looping them in. We just put out the link in the chat to that NACO webinar that Bill referenced. So you can go to that link to get signed up if you want to hear more about possible uses tomorrow. And I don't see any other questions. Give it just a couple more seconds in case one pops in. Okay, well, thank you so much, everyone, for your time today. We really appreciate you being here and your partnership. And thank you to those of you listening in. And if we can do anything else to help, just let us know. All right, thanks so much, everybody. Have a good afternoon.